Okay, welcome back. You're with us here on Editors Roundtable. We're in conversation with Nilesh of Envision. Nilesh, we're talking themes, and I think digital is a big one for you, right? And I think recently you've also bought into a consumer/retail play, but in the US, right? I mean, that's been a newer kind of an addition over the last
absolutely. I mean, that's a company whose stock price probably is down 75% from the peak now, and therefore I think it just represents some good, nice value because they essentially successful. It's not just US, but it's US, it's UK, now Germany. And it's a classic case where you manufacture in India or you make in India and also have a supply chain spanning many other countries. And you pretty much manufacture or make in low-cost countries and you basically sell in high-income countries. And that's a very, very good arbitrage to have. So I think clearly both the stock price decline and the fact that the business model is getting more and more resilient with every passing day, with every passing quarter, I think it represents some good, incredible kind of opportunity. I also think it's probably one platform which is India-centric, but has an opportunity to make a global mark. So we kind of keep looking out for these kind of Indian brands which can make it big.
Since you can't, for our viewers, Nilesh is talking about Vaibhav Global. That's the name of the company. And full disclosure, it's all publicly disclosed that Nilesh's fund owns that. It's one of a kind of a business, right? I mean, it's not. I've not seen very many. It's a unique business.
Yeah, absolutely. It's unique. And again, I think it's a great combination of both manufacturing at home and selling abroad to the consumer. It's not like kind of B2B where you make something and export. It's not a B2C, it's a B2C business. So I think it's incredible from that point of view.
I just want to come to financials as well, Nilesh, because a lot of people have been waiting for that leadership, from banks. What the earnings season seems to be telling us that growth is not coming by as quickly as what one would have wanted. Your thoughts here, and in the midst of all this, we had this IndusInd saga. I was frankly, personally quite relieved to see at least it didn't impact sentiment of the markets too much. But the management uttered, the F word, the fraud word, and we don't know. The last has still not been said on it. So financials within which, and maybe IndusInd, if you want to share any advice on it at all.
So within financials, clearly, I mean, I still believe the large banks, I think any kind of uptrend or upmove will really be dependent on big bouts of foreign liquidity coming in, because that's a space which foreign institutional investors love. I mean, that's something that they're comfortable with. But in terms of earnings growth...
Intrinsic earnings, when the money comes, they'll rally, we know that.
I think intrinsic earnings are not... These are businesses which are not going to grow beyond, like, say, 10-12%. And they face the specter of declining ROEs. So if you look at all these banks, I think over a period of time, the ROEs have kind of begun to inch down. And that's, I think, a trend which will continue. So I think from having 15-18% ROE, they could potentially land up at maybe 12-14%. Institutional investors don't like that situation, number one. Number two, there are other opportunities outside the big banks which have done really well. I mean, we talked about, say, for example, the insurance platform. I think all the housing finance companies, the mortgage companies, they did very, very well. They had some challenge in terms of tighter liquidity and high interest rate last year. But this year, that situation has turned. You have better liquidity, benign liquidity, and interest rates falling. That's a really sweet spot for them. So there are these kind of pockets. And then there's essentially the big NBFCs like Bajaj, etc., who essentially have made a comeback. So I probably think that space will outperform yet the large banks. The large banks will do well, but there's more liquidity kind of coming in.
Non-banks
the NBFCs, HFCs, I think that's a better place to be.
Nilesh, that's the call with the IT as well. The large cap IT will report very muted numbers, but the few mid-cap ITs like Persistent, Coforge will show very strong growth.
Yeah, I mean, the difference is just, it's very stark in terms of the growth numbers, because of course, all of these companies are very capital efficient. The ROEs are in the 20s, so there's no issue with that. There's no issue with capital allocation. There's no issue with governance. The issue is in terms of growth, because the big guys are so big that they struggle to grow beyond the single digit. I mean, I think most large companies grew probably at about 6% for the last 1 year, versus that the tier 2 companies grew in double digits.
True.
And that, I think, scenario continues. And I think when you have things like AI and all coming in, the tier 2 companies will use that as an opportunity, while the same AI will be an adversity for the large.
Have you looked at any company within the mid-cap IT which you think will really benefit from the AI explosion which is going to happen in the next few years?
So a company that we own with full disclosure, like say Newgen, which is a product company, but they have been able to create AI tools and AI agentic solutions for their customers. I think the company itself is already doing well. They have strong tailwinds, but for them, this can actually kind of add to the growth rate, and it could kind of mean a lot. That if you're growing at, say, 15%, can you therefore grow in, say, high teens? It's quite possible. For the big guys, just purely the maths doesn't add up. And I think that's the biggest challenge for the large IT services.
It's a hardware, basically. It's a hard...
No. These are all software. These are all software solutions.
For new gen as well.
That's right.
Unlike players like E2E, I don't know if you...
Yeah, so that's total hardware. That's total hardware. That's the whole world of chips and those kind of things. So yeah, that's a very different kind of a thing.
Okay.
And Prashant, just on that note, I mean, while there's a lot of hype around, all this, the whole, the chips and all of that.
Is Newgen trading at AI valuations or normal valuations?
No, I don't think that, but I think if you really look at the history of markets last 10, 20, 30, 40 years, the hardware guys have a limited shelf life in terms of the market. It's the software guys which essentially rules.
Yeah.
So look at what Cisco was 20 years ago and versus that Microsoft then, Microsoft now.
Yeah.
And always the leader of the next decade comes in from the software side. And then those guys rule for 10, 20, 30 years.
Also much more consistent. I mean...
much more consistent. And the challenge is that on the software side, you still have pricing power. On the hardware side, your prices keep coming down. I mean, that's the whole nature of innovation. Innovation helps you to improvise, lower costs, and create a better deal for consumers. I think that's the challenge for hardware, that hardware always faces the specter of falling prices. And that, I believe, is true for all hardware companies.
Absolutely. I think NVIDIA is the exception because they make the chips and they are physical chips. But I mean, and those are chips that go into the AI story of the world, so to speak.
But even there, I mean, there's Chinese chips, right? Yeah. Which apparently are equally good, and the US is now trying to block it.
Exactly.
Because, there is, which ties into the point that, lower, and Chinese chips will be definitely cheaper than, US
not
chips.
coming in the US, not allowed. Okay. All right, great conversation as always, Nilesh. Thank you very much, very interesting. And you're leaving us feeling a lot more optimistic, I think. Like you're saying, there are more positives than negatives as we analyze markets at this point in time. So thank you very much for being with us today. All right, with that, it's time. It's a wrap on this edition of the show. So from Nimesh, Prashant, myself, and the whole team, thank you very much for being with us. Do stay tuned. News and updates continue right here on CNBC-TV18.